Welcome everyone to our session on how to manage benefits in Sage 300 Payroll, presented by Payroll Practice Leader Anna McNally. Go ahead.
Thank you. Welcome to today's session on how to set up payroll codes for taxable benefits in Sage 300 Canadian Payroll. My name is Anna McNally. I'm the Payroll Practice Lead at BAASS Business Solutions. I'm a certified Sage consultant as well as a payroll compliance professional. If you have any topics for next year's series on payroll, please submit them when you evaluate today's session. Sessions are recorded and posted on our website. What are benefits? Benefits are goods or services employers provide directly to or arrange for a third party to give to its employees on their behalf. A benefit may include an allowance or personal expense reimbursement. We are going to look at 3 payroll scenarios today. But before you add a payroll code in payroll, always determine these factors. First, consider the level of the earning deduction code that you want to add. Determine the general ledger account numbers to which you want the earning and/or deduction amounts to be posted to. Determine effect, if any, to other payroll codes. Determine withholding taxes or other taxes such as health tax, GST, HST, and workman's compensation. After adding the new earning or deduction code, assign the code to selected employee or employees. Test and verify the calculation of the code. And if there's any T4 reporting, verify that it is reporting in the correct T4 box. So now we're going to look at these 3 scenarios. Common ones would be life insurance. How do we set up a taxable benefit for life insurance in payroll? An RRSP plan, as well as a fitness membership. As we go through each one of these, as we set them up in Sage 300, we will talk about withholding tax implication. But just know that from jurisdiction to jurisdiction, meaning the provinces of where your employees work, tax implications will change for things like HST, workman's compensation, should it be included, as well as any taxes or levies or health tax. Those components we are not going to cover today. Our focus is withholdings, which would be your federal, provincial taxes, income taxes, your CPP, EI, or if you're in Quebec, it'd be your QPP, QPIP. All right, so let's hop on to Sage 300. From Sage 300, you will select Canadian Payroll, and then Payroll Setup, and Earnings and Deductions. The first one we're going to set up would be a life insurance premium where the employer pays a portion or perhaps pays all of the premium. You would give it a code, you would give it a name, then you have to discuss what type of category or what type of code this payroll code is. So this is a benefit. And then there are 2 types. There is a cash and a non-cash. What the difference is a cash would actually pay out the code. So if you had a cash code and you put it on the employee's profile, it would actually issue a check. And the other is a non-cash. You're meaning that you're recording it for tax purposes and to show up on the T4. So for life premium, where the employer is paying part or full premium, it would be a non-cash. Then you have to identify or determine whether it's a flat amount or whether you are paying it based on a percentage of a rate table. Most commonly, life insurance is a flat amount, but sometimes it's a percent of another code. For example, 50% of what the employee pays. But for this sample, we're going to say it's a flat amount. And then your frequency, how often will this deduction or this benefit be calculated? On the opposite side, whether you want to print the code on the earning on the pay stub, whether it is subject to workman's compensation, and whether you are going to be posting the liability to the general ledger. That is an option. If you do not select that, there will be no GL entry created. But for this purpose, we are going to select Post Benefit to the General Ledger. The next few tabs you have to review and fill out. So under the Employer tab, you will identify the T4 implication for this particular benefit. And in this case, it's going to go to box 40, which is other taxable benefits and allowances. And then you could either put an amount here or leave it blank if that amount differs from employee to employee or based on whether they are family or single. If you leave it blank, when you add this code to the employee's profile, at that time, you can add the amount. And then you have to determine what taxes are subject, this code is subject to. So for example, life insurance is subject to all CPP. So that would be CPP, CPP2, and of course, if you're in Quebec, it would be the Quebec CPPs, QPP, and your income taxes. And in this case, I'll put Ontario taxes. This is the province of employment that I'm working on. And then the next question is, what about EI? Well, because this is an employer-paid benefit and it is non-cash, it is not subject to EI. Okay, and then you would put in your GL distribution code and the GL account codes that represent your expense. And because we turned on liability, then you would do the same thing under the liability code and then add. So that's how we set up life insurance premium that's being paid by the employer. So what's going to happen when you add this code to the employee's profile is the employer is paying for the premium, but the portion that the employer is paying for is taxable to the employee. So when you calculate the pay and you're looking at your pre-check register, you will see that there is an amount that's a tax amount that's going to be included for this benefit. All right, so the next plan that we're going to look at, or our next scenario, would be an RRSP plan. This would be the employer's portion. And just so you know that whatever you put under the short description is what appears on the employee's pay stub. Not the description up here. This is for your benefit, so you can put as much detail in here as you like, but where it says short description, this is what is going to print on the pay stub. You have to identify the category, and this would be the benefit. And then again, we have the cash and non-cash. You have to ask yourself are we providing monies to the employee for this benefit, and then they can take that and invest it into their RRSP? Or are we contributing on the employee's behalf, but we are remitting the monies to a provider? Now, when it comes to RRSPs, you have to ask yourself whether the RSP is restricted or unrestricted, because depending on whether it is restricted or unrestricted, the tax implication changes. So there is a website on CRA that will actually identify the taxable benefits and whether they are taxable CPP, EI, federal, provincial. So before you set up any code in Sage 300, as our PowerPoint showed, always check the tax implication. So that's your withholding tax, as well as whether it's subject to workman's compensation. Is it subject to any levies or employment health tax, as well as if there's any HST or GST involved in the benefit, that also has to be accounted for. So this is going to be a non-cash. You can determine whether it's a flat amount, whether it's a percentage, or if it's based on a rate table. These are your options. How often, whether you wanted to print on the pay stub, and if you want to post the benefit. So RRSP, the employer portion, is taxable, and we're going to put it in box 40. And if this is an unrestricted, then it is subject to all taxes, meaning CPP, EI, and income taxes, and if you have health tax. But if it is restricted, and the difference between the two is a restricted RRSP is once the money goes in, you can only take the money out for home buyers and for education plan, whereas an unrestricted plan, an employee can take the funds out at any given time. So the tax implication will differ based on that. Okay, so you would insert all the applicable taxes, and I already have a code set up here, so I'll just go through that with you. So here's one I set up earlier. This particular code is unrestricted. It's a benefit non-cash. We're doing it as a percentage of base. So if the employee earns a certain amount, we're doing it a percent of that. When you are using a percentage of base, you always have the calculation is what do you want to base that off of. So you would put in all the earning codes that are subject to that calculation. The employer portion, so we have it as going to T4 box 40 because it is taxable. And here you can put in as a sample, you can put in what the percent is here. If the percent differs from employee to employee, leave it blank. And when you add this code to the employee profile, at that time, you can identify the percentage. And if there is a min or a maximum, you could put those in here as well. And in this particular scenario, we're doing 3% of any earnings that are under the code called hourly, and to a maximum per year of $3,500. So even if the employee contributes more, the employer's maximum for the year is $3,500 in this sample. And because it is an unrestricted, unlocked RRSP, we have all applicable taxes. And in my sample here, I have several provinces that I have employees in. So I've included all my taxes that are provincial, as well as my federal, and then my two QPP, CPPs and EI. And then your GL distribution code. Okay. The next type of code I want to show you is one that's a fitness membership. So this particular one is going to be a cash. So it's still a category benefit, but it is a cash, meaning that the employee has gone out, they have gotten themselves a recreational membership or a fitness center membership, and the policy of the company is that the company will pay them back, reimburse them for that, but it is a benefit. So because we are going to be giving the cash back, the type is cash. The calculation method here we said was a flat amount. We wanted to print it on the pay stub. And then it is box 40, it is taxable, and then subject to all the taxes, and then our GL equivalent. Now, one of the things I wanted to show you before we end our session today is there are a lot of resources on CRA website, as well as workmen's compensation and in each provincial province's jurisdiction. So here I have the employer's guide to taxable benefits. This guide is very detailed. It's updated as CRA makes changes to taxable benefits, where you can quickly hop onto it, identify the type of taxable benefit that you have, and it will tell you whether it is taxable to income taxes, as well as whether it is CPP deductible or EI, and what T4 slip it belongs to, and if there is any HST, GST implications. So all the information that you need when you're setting up a taxable benefit for an employee, all the information can be found on CRA, as well as your province of employment, the jurisdiction, there's information on that. Your workman's compensation, there's information on whether it's assessable, considered a part of assessable earning or not. All the information is available. So before you set up a code, please investigate the tax implications, because there are penalties if you do not file taxes or deduct taxes appropriately for a taxable benefit. All right. So thank you very much for participating in today's session, and please look for the recording on our website. Thank you.